Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip explains why the great credit crunch is intensifying. The 5-year Fannie Mae is 95 basis points cheaper than Treasuries, which is 44 wider year to date and 16 wider in August so far. The 10-year Fannie Mae is 81 basis points cheaper than Treasuries, which is 30 wider year to date and 17 wider month to date. The spread widened by 6.6 basis points on Friday alone during the flight to quality into Treasuries. The housing bill was supposed to restore confidence in Fannie and Freddie, but foreign central banks reportedly sold nearly $11 billion of their holdings of this debt in the past 4 weeks, down to $975 billion. Last week, Fannie Mae sold $3.5 billion in new 3-year debentures. Central banks bought just 37%, down from 56% in May's $4 billion offering. Asia took down just 22% of the notes, down from 42% in May. For the 30-year bond, annual support is 4.975, with quarterly, monthly, semi-annual pivots at 4.628, 4.593, and 4.489, and weekly, quarterly, semi-annual resistances at 4.412, 4.191, and 4.107. The 30-year ended the week below its 200-day simple moving average at 4.513. My second blip tracks the declining prices for COMEX gold and NYMEX crude oil and the weak euro. Normally, gold would be considered a safe haven, but pension funds are reducing their allocations to this investment class called commodity investments. For gold, weekly closes below my semi-annual pivot at 796.5 indicate risk to my annual support at 729.5. Gold broke below its 200-day simple moving average on August 5th, which is now resistance at 890.9. Weakness for crude oil is fueled by slower global economic growth and selling by pension funds. In my opinion, commodity investment by pension funds reached about $300 billion at the end of June, which caused gasoline to spike above $4 per gallon. The 200-day simple moving average at 110.18 provides important support with weekly resistance at 120.73. Annual supports lag at $78.40 and 76.30, and that's my target by early 2009. The euro followed gold below its 200-day simple moving average on August 8th, and that's now resistance at 1.5230. Annual support is 1.4174, with my semi-annual pivot at 1.5162. My third blip shows the improving weekly chart for the Dow Industrial Average. While the Dow did not end the week above its 200-week simple moving average at 11,722, momentum is rising on the weekly chart. Monthly support is 11,075, with the 200-day simple moving average at 12,470. My fourth blip shows that the Residential Housing Index, HGX, and the Regional Banking Index, BKX, are bottoming. But can these indices be trusted after 8 failed signals in 12 months? HGX has a positive weekly chart but remains below its 200-day simple moving average at 113.27, and it's down 10.9% year to date. I predict that more builders will fold in the quarters ahead. The BKX has a positive weekly chart, but it too is below its 200-day simple moving average at 79.96, and it's down 25.3% year to date. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 in 4. Enjoy your day.